Now let's get a sense of some of the business stories from around the world. And let's begin with China, because manufacturing is picking up again, struggling under the weight of strict COVID regulations. Our business editor, Charles Pellegrin, is with us. Morning, Charles. Morning,
Gavin. Absolutely. It expanded at its fastest pace in more than a decade in February, according to the official state index. Demand really rebounding after COVID restrictions were lifted following nationwide protests at the end of 2022. Factory output had already returned to growth in January, and the February reading now showing strong recovery in both supply and demand expansion. If employment levels, though, are lagging behind. Looking at the Caixin Index, a private gauge of activity, expansion reached 51.6 in February. That's the first time it expanded in 7 months. In January, it was below that 50 line of 49.2. The 50 marks the level that separates expansion from contraction. And the government is planning on increasing expenditure to further boost its economy despite a record high fiscal deficit in 2022. China's Minister of Finance, Liu Kun, spoke at a briefing this Wednesday.
As we continue to optimize our pandemic control policies and the package for stabilizing the economy and the follow-up measures continue to be released, the Chinese economy will continue to rebound and local governments will see better fiscal conditions.
And this indicator on Chinese factory activity leading to a boost on the Chinese stock markets this Wednesday. All main indices trading higher on the news, as you can see, especially in Hong Kong. The Hang Seng up over 4.3% and the Shanghai Composite up 1% at the close. The Nikkei is trading slightly higher in spite of data showing factory activity in Japan has slowed down. And in Europe at the open, we're seeing shares trading slightly higher, with the Paris CAC 40 up just under 1/3%, and the same for the FTSE in London, just over 1/3%, and DAX in Frankfurt up over 0.4%. Investors awaiting key data today on the European factory output, Italian GDP figures, and German inflation. Well, the United States unveiled last year a $39 billion program aimed at building up a locally based semiconductor industry. And on Tuesday, the Commerce Department has officially called on companies to apply for these funds. They also set up safeguards to ensure the program wouldn't be taken advantage of. As a reminder, the CHIPS Act, which provides subsidies to companies looking to make semiconductors on U.S. territory, was set up to end an over-reliance on supply chains that are mostly based in East Asia. Semiconductors are used in everything from military hardware to dishwashers, and the disruption caused by the pandemic meant that there were huge shortages in this field. Well, that's why the Biden administration has made it such a priority. Now applicants for the program will have to abide by clear rules. For instance, they can't invest in expanding production in countries of concern for 10 years. That's a clear dig at China, which the U.S. sees as a strategic rival. And if they receive more than $150 million in grants, they'll have to return profits that are over expectations to the government and won't be able to use the funds for dividend payments or share buybacks. And the Biden administration also wants to make sure the money is used in a way that fits with its political agenda. This includes labor agreements and providing childcare for workers. Take a listen.
It's also a recognition, though, that they are really trying to address some of the workforce constraints that we know exist in the chip sector. We know we've got a skills gap. We know we have a labor force gap. And then when you look at the childcare requirements, I think that's an attempt to address head on the fact that childcare can be a barrier to more participation in the labor workforce, and that's something they're trying to address.
And the U.S. is encouraging to bring manufacturing back to the U.S., or at least to the neighborhood, what's often referred to as friendshoring as opposed to offshoring or reshoring. An example, electric vehicle maker Tesla is planning to build a factory in Mexico. Mexican President Andrés Manuel López Obrador said the plant would be in Monterrey and that he received commitments from Elon Musk, the CEO of Tesla, regarding the water demands of such a plant.
The plant is going to be established in Monterrey with a series of commitments to face the problem of water scarcity. They are going to help us in this regard.
And that's it for the business news so far.